Hello, hello, hello. How you guys doing? Welcome back. It's been such a long time. Uh, for me, it's like an eternity. I've been doing this now for 5 years, non-stop every day. Man, this thing really kicked my ass. I mean, kicked my ass, whatever this fucking pneumonia is. COVID wasn't as bad as this fucking thing. Still trying to recuperate, still have pneumonia, still taking medicine. Whatever. Me and old age are not going to get along very well. I'll tell you that right now, my friends. We're not going to get along very good. All right. So, what is going on? Well, there's a lot of feel good. Biden is in office. Sanity is back to the office. We're going to be following science now instead of vague hunches and feelings of Trump, which is definitely a good thing. The economy has been rolling over again, which is something we anticipated would happen. The stock market is going higher based on the same news, vaccine news, stimulus, blah, blah, blah. And as we know that, the more money that you deficit spend, the more money that is going to be pumped into the stock market, right? So for those of you who are new to what we do, just look at this diagram here, okay? So money pumps in from deficits, right, into the productive economy. Then it goes through the household income to savings, and it becomes profit savings. Remember, profit is net of cost. And when profits become savings, they are pumped into the stock market, and then stock prices and asset prices go parabolic, as we have been seeing. You've seen it in real estate, you've seen it in commodities, you've seen it in stock markets, you've seen it in bond markets. Everything is going up, right? The everything bubble. I think you're going to be hard pressed to find even the greatest of bulls not being like, okay, what the fuck is this? Right? The perma bulls even are starting to question, like, okay, where are we going with this? So, as long as they keep pumping, markets will continue to go higher. Doesn't mean there's not going to be corrections. Doesn't mean there's not going to be pullbacks. It just means that the bias is going to be to the upside. And as I shown before with the ETF flows, this is last year, asset under management increased by 8.54%. Okay, that's a lot of fucking money being pumped into the market, right? And where are they coming from? Well, they're coming from deficits, funded by QE. If you take a look at the earnings yield, okay, 2.57, lowest we've seen it since back in 2009. Okay, so it's heading in the wrong direction, clearly. Economy is kind of rollovering, stagnating. Europe contracted. You got stock prices going higher. You have interest rates going higher, which, when interest rates are rising and you have the earnings yields falling, that creates a compression. This is scaring the Fed a little bit because as long as they can keep interest rates zero, that's bullish for stocks, and they want stocks to keep going. But if interest rates are rising, that's going to be problematic for them. So they're gonna freak out here a little bit. All right, so let's look at the equal weighted ETF here of the S&P 500. It's continuing to grind higher in this little F flag. All right, dividend weighted ETF kind of stagnated. Okay, it's kind of going up in steps. It's still stuck to the previous high, so we don't have a clear breakout here as of yet. This is really messy looking, so I'm going to have to fix that at some point. Transportation continues to go higher. We had this bull flag set up, and sure enough, it did go higher. Okay, so now we broke the previous high, and now, again, it's kind of, stagnating on the way up. VIX continues to fall, and now we're getting to the point where this is no longer a rounding bottom. Okay, I mean, you could do it if you kind of stretch it, but I would not call this a rounding bottom anymore. It's just kind of settling in right into this area where it's been comfortable since the start of this pandemic. New York Stock Exchange, again, grinding higher. Nothing too fancy, all right. Dow Jones, all-time highs, all right, grinding higher. S&P 500 up against the resistance here. Now here's what I want to kind of emphasize. That the longer we stay in this, everything is good. If it's bad, it's good. If it's good, it's good. And we keep pumping it with deficits in QE. That what's likely going to happen at some point is that we're going to start going parabolic. Is that it's going to start to accelerate to the upside. So let me show you an example of what I mean by that. Okay, now this is not the one I want to show you. Let's go to NASDAQ. Go on a weekly. All right. Now look at this trajectory here. See how it kind of accelerates to the upside? Well, we are starting that acceleration now. Up here. Okay, we're starting to get to that, vertical kind of fucking move. And usually when that happens, that's ending, right? It finishes off and then it creates an Eiffel Tower. So we're back to that Eiffel Tower kind of acceleration to the upside. That's not a good thing, right? But it's certainly not going to make it very easy for shorts, right? Because the shorts are all blown out. I mean, how do you short this, right? I mean, this point you can, dabble and dibble with it and fuck with it a little bit, but you cannot go balls deep short, and that's problematic for the markets because it creates this euphoria, which leads to a bigger bubble and a bigger bubble, and then it bursts and you get the Eiffel Tower. So we're back to that now. All right. Now this was a target that we had set based on how many trillions we're going to get more. Okay, this is the first target. This was with the 900 trillion. Now we're going to see the other 2.0 trillion, whatever it's going to come out to be. Nobody knows what it's going to be. But what do you cut? You cut state and local. You cut vaccines, what it requires for vaccines. You cut the schools, what is required for schools to open up. Do you cut from the money, the stimulus, quote unquote, money for the people? It's going to be difficult, right? So what we're looking at is probably another year of 20 to 25% deficits to GDP. That's a lot. That's a lot. And that's not taking into account, right? It's not taking into account the money that is being forgiven, right? There's a lot of money in here that's going to have to be forgiven through SOVs, special operating vehicles, and that's not even factored in. And on top of that, you have the normal auto stabilizers that are kicking in. You also have the normal spending. So, it's no wonder this thing is going straight up, right? It's accelerating to the upside. So, it's going to be very difficult to find the sweet spot to short this when the time comes, because it's never going to feel like it's going to go down until it does, and then it just keeps going. Right? That's what the Eiffel Tower looks like. Taking a look at the small caps, right? continuing to grind higher. IPOs, I think to some extent that this is probably going to be a little bit of a leading indicator. Uh, these are all the IPOs in the last 2 years. They're just going gangbusters straight up. So let's see how this performs, right? We're going to follow that. We're also going to follow ARC, which is something similar. That looks very bullish. The fags, right? Look at that breakout. Right, so this is why I don't like wedges. All right, they create the psych play to the downside and then do the opposite. All right, so I don't like them. But again, if the market was to push higher, then it would have to be led by the market leaders, right? Google, Facebook, Amazon, blah blah. So right now it's just pulling back a little bit from the previous high. Right, so now the head and shoulders is still in play so long as it's doing the head test here. It's okay to come all the way up to the head, test it, and then possibly fail. I don't think that's going to happen, but we'll wait and see. Let the data come in and see what it says to us. All right. How about Europe? Europe is coming up against that resistance area with the two previous highs. All right, still very bullish looking. Oops. Still very bullish looking. Nothing there. UK, all right, pulling back a little bit, little bull flag. Still bullish looking. Kind of clean it up a little bit. All right, so definitely double top is out the window now, right? Take that and trash it. Don't need this. Hey James, how are you, my friend? If you guys have any questions, please just post them and I'll answer. Germany, all right, still within this megaphone-ish kind of pattern, testing the previous high. Right, there's a common theme so far. Denmark, a little bit of a pullback up against support. The world stock market index is up against the resistance now, right? Go all the way back. Go all the way back to 2011, right? So you hit it once, twice, 3 times. Now we're up here 4 times. Remember, when we break the bottom, usually we'll break the top. Okay, so it's quite possible that this continues right through. Okay, doesn't have to. Can reverse here, but it may continue higher. Airlines. All right, so airlines, we had another little push to the upside, not really doing it, right? So always remember what's it trying to do, how good of a job is it doing it. Right now, not doing a very good job, but it is a structure above a structure. All right, so here's the one structure, here's the second structure. Trying to coil up to make another push to the upside. Let's see if we can do it. Now, KLM came out and said they're going to let go of another 1,000 to 800 people. You got some airlines saying, okay, we're okay, we're going to start to open up. You got some other airlines that are still contracting. So it's a mixed bag. There's nothing, that's kind of flowing, right? And I think that's going to be the case with all the economies. You see, again, Asia came out. China growth was 2 point something percent. Europe contracted. Let's see what the U.S. is going to show. Probably they're going to fuck with the numbers and say it's a little bit positive, whatever. But overall, the world economy is not firing on all cylinders. So you get these stalls, right? There's knocking of the cylinders, out of sync, backfiring. Okay, airlines we talked about. All right, so the Chinese stocks are continuing to push higher. Nice little high base here. Particularly, I like and I have talked about these, is this Chinese fangs, right? They're really, really pushed up nicely. We caught this, thank God, up 22%. So we bought right in here on the bounce. So that's good. Nifty 50 continues higher. Okay, just kind of riding the upper trend line. Japan kind of stalled right up against the resistance. Again, you break the bottom, you're going to break the top. Likelihood to continues higher is high. Taiwan is kicking ass all over the place. Korea kicking ass all over the place. Saudi, not bad. Australia continues to push higher in this channel. Okay. And we had this to continue to push higher. So I think that more likely than not, we're going to test the previous high right up here. Okay, at this point. But again, look for that incredibly bullish move to the upside. I think that's coming. Brazil, kind of stalling here, right? Kind of stalling, trying to figure out what the dollar is going to do. Remember, when the dollar is weak, it's great for emerging market stocks. Okay. Emerging markets continue to push higher. All right. The banking ETF, I'm sorry, the BRICS, which is Brazil, Russia, India, China, kicking ass all over the place. Skip Istanbul. Okay, so real estate trying to push higher, right up, to break out of this bull flag here. We have the arrow in place for quite a while. It's testing the bottom support area, so let's see if it can do it. Financials, really very happy with the higher interest rates. Okay, testing the previous high. We've been here before. Let's see if it can punch through. Now, again, in this kind of environment, banks don't do bad, they don't do well. They're just kind of like stagnant. Right? They'll move up a little bit, sure, but they're not the place to be. All right. Here's a more pure banking ETF. Okay. Oil. All the Trump bots are all fucking excited about oil all of a sudden. Continuing to stay above the trend line, so look for this to continue to go up until it breaks. Right? Don't look for too much higher. Maybe 10% at the max, I would say, because the demand is not there. Right? And unless there's more devaluation in the dollar, then it hit that magic round number of 50, kind of goes through it, maybe goes a little bit higher, and then it starts coming back down towards 50, it goes 49, and it kind of churns right in that vicinity. Okay. Gold. All right. Breakdown, pushing back up, it's all over the fucking place. It doesn't know what to do. So you got to struggle between the fear indicator and the people who think there's going to be inflation and currency devaluation and blah, blah, blah. Gold is real money, So it's a fight between these two people, and they're bipolar right now. They don't know what the fuck to do with it. But they're maintaining it right around 1850, right? Silver, okay, kind of the same deal. It's kind of all over the place. Commodities. Overall commodities looking very bullish. I would say this is a high base right in here. Okay, right in here, this is a little high base for more upside. Okay, so now these are all commodities, right? Doesn't mean all of them are going to kick ass. The ETF for that is DBC. You can follow that along. Again, it's already broken out. It's looking like it wants higher. Precious metals, confused. Base metals, right? They're coiling up for more upside. Steel, pulling back a little bit, still looking very bullish. Palladium, right? Still doesn't know what to do. Copper, nice grind to the upside. Again, we're looking for more upside. Here's the arrow. DBA, ooh, boo, 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 boo. Ooh, boo, 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 boo. Continues higher, huh? Yeah. Well, that's gonna again, it's gonna reflect in the supermarket. People are gonna start freaking. They're gonna blame Biden. Blah blah blah. Are you still running towards a cliff? Of course we are. Yeah. We're definitely running towards a cliff in the dark. Because remember, for me, there's so many economic theories out there, and you got the MMTers, you got the Austrians, you got now almost everybody's some form or shape an MMTer, right? That deficits don't matter, but none of these theories can produce economic growth, right? If they can't produce economic growth, then what are they? What kind of theories are they? Well, they're financial engineering. That's it. If you can't print a dollar and get at least $1 worth of GDP, then you're just making shit up. And everybody's using the same tool, which is printing, to come up with their own version of economic theory. They twist it and bend it and flip it upside down, but it's still the same thing. So, yeah, to me, it's garbage. You know? And a lot of people are like, "Oh, you're trying to change economics." I'm not trying to change shit, man. You show me fucking economic growth, I'm happy. I'm a happy camper. You can't show it to me, you're full of shit. It's that simple. That's why I call it real macro, right? That's why it's real macro. You're going to sit here and do a lot of financial engineering, trying to twist this and this facility and that facility, and we're going to QE this, and then we'll deficit spend here, and then you start that, you're bamboozling everybody. So yeah, we're definitely heading in the wrong direction. Okay, corn continues higher, and look at it now, parabolic. Wheat continues higher. We had the arrow. I don't see this changing. Okay, might pause for a little bit. Soybeans, fucking parabolic, kicking ass all over the place. Skip net gas. All right, Bitcoin a lot deeper of a pullback. It doesn't really concern me. I know it broke the trend line, which is a red flag, a yellow flag at least. But it doesn't really, I don't know, it doesn't concern me that much. I think it still has uh, room to go to the upside, to the 50,000 mark and above. And if you studied kind of oil a few years back, you'll see that it kept going down to 34, then going up to 30 to 50, then going down to like 42, then back up to 50, then going back down to 39, back up towards 50. So it kind of, I don't know, these numbers for some reason it gets stuck in people's heads. They're gonna, it went up a lot for sure, right? So now they're gonna try to wiggle it, right? Shake people out. New bulls are gonna come in and they're gonna dry fuck it, as we say in Greek, right? They're gonna dry fuck it, and then finally it's gonna resolve to the upside. So I could be wrong, but I'm just not too concerned about it. Now, if I was in something like Litecoin, Ethereum, you know, those things I don't have as much conviction as I do with Bitcoin. All right, the dollar, okay, try to push higher, more of a corrective move out of this channel, okay, and now it's failing. So, yeah, doesn't look too good for the dollar. Right. Japan still didn't break out, surprisingly. It's still within the channel, continues to push higher. I'm sorry, lower. As the markets move higher, do you think precious metals? It's hard to tell, man. Remember, there's two things that drive precious metals, right? It's fear, right? And then you have the devaluation. When the interest rates, I guess a third thing would be the interest rates, right? When you have 0% interest rates in a bond, why the fuck would you hold the bond and go buy some precious metals, right? When you get interest rates start to rising, and you're starting to get a little bit of an interest rate, even though it's still negative, inflation adjusted, well, it's better than no interest. So, which of the three is it right now? I don't know, honestly. I think they're just confused. I think they're just confused as to what they want to do. We just have to wait for more data, more resolution. Okay, I hope that makes a little bit of sense. I know everybody wants to make it simple. That, oh, this dollar devaluation, buy gold. Okay. Uh, I don't know. Okay, good. I'm glad that makes sense. All right. Euro. Lagarde came out. She's like, yes, we're paying really close attention to the currency exchange. Well, why the fuck would she do that? See, here's the problem, right? That they don't like higher euro. They want to be net exporters. Well, that's bad for the U.S. when we have high unemployment. It doesn't mean that it's good that the dollar devalues, okay? But from their perspective, they just want a weaker euro so they can keep exporting. So Lagarde, she sees things her way. Currency devaluation, yes, is good from the standpoint of creating jobs, but on the other hand, how are you going to create jobs if you're importing more than ever in history? See, it's a different way of looking at the same problem, right? So, I don't know. I think, the world wants the U.S. to continue to be net importers, and that's bad for the dollar. It's bad for the U.S. because we need to export more so we can create more jobs when we have high unemployment. And I think we're kind of stuck, and there's a bit of a currency war going on for different reasons, each region, right? I don't know. We'll wait and see. I still remain bullish on the euro, short the dollar. Pound USD continues to grind higher. You had some of these pullbacks, okay, but it does continue to push higher. So that's good. Trying to study a little bit the USD Turkish lira from a charting perspective. You see how it kind of goes parabolic straight up and then starts to fall, right? And then goes up and then starts going parabolic again, then starts to fall. I think this is the way you should kind of imagine what the stock market is going to do. Again, so long as you keep pumping the market and all news, no matter if it's good or bad, is good news, then I think you're going to end up with something like this. And the more parabolic straight up that you go, hello Alessandro, the more straight up that you go, the more you're going to have a pullback, a bigger correction. But then it keeps going up, and then goes parabolic again, and then it starts to correct again, right? But the net result is it continues to go higher and higher. So study this chart. Go back and look at the NASDAQ 2000 and try to see, what I see. Draw some comparisons. All right, dollar ruble, nothing there. The dollar continues to weaken against the CAD, which is remarkable. It's really like dollar's really just getting its ass kicked by Canadian dollar. So I guess we're going to come somewhere down here, 120 at some point. The way this looks. Okay. Australian dollar continues to push higher. We've talked about this. Same thing with New Zealand dollar, right? Long-term bulls, even if it starts breaking down, even if there's some kind of a correction, you want to be buying that. US dollar, Mexican peso. I mean, dollar's weak against the peso. Are you fucking kidding me? Right? It's like, cringy. But it is. And the dollar continues to weaken against the yuan. All right. And let's take a look at the 10-year. Okay. This is the 10 and the 2s. 10s continue to push higher. Right. So there's the steeper that this becomes, the more profitable it is for banks. Okay, the more risk they can take. Doesn't mean they will. It just means that there's more risk tolerance. Aggregate bonds still pulling back. All right, they're not pushing up, which kind of makes sense since the 10-year is rising, right, and it's high basing on top of that, right up here, right. We had a target of 122. It's now 110. It was as high as 118. Okay, still high basing, no letting up. Again, they're in a collision course with stock yields. Not a good thing. So it makes sense why aggregate bonds will continue to weaken. All right. All right. Let's see what else. What else? All right. Let's go IBB. Okay. Biotech. We had the arrow here for a while, going up very nicely. ExxonMobil. Okay. Kind of pulling back a little bit, but doing fine. Hotels. All right. They're not doing much. Hotels versus airlines, not doing much. Royal Caribbean, okay, right at support. Don't be surprised if this starts to pop. Okay, especially on stimulus news. Norwegian, same thing. Carnival, same thing. So the price appreciation is not coming from shitty stocks, right? It's coming from the market leaders. You can see that now, right? Apple, back towards all-time highs, cup and handle. Okay, here's a cup, here's a handle. Look for this to continue to push higher. At this point, I think it's inevitable. Amazon, okay, breaking out of this support. Look for this to push higher. And this was, this was a no-go. This looked like a bear flag, and instead, it fooled us. So now we're going to look for upside in Amazon. Microsoft, okay, broke a little bit towards the bottom, kind of pushing to the upside. Again, this is a head fake. So now we're going to look for an upside in Microsoft. Facebook, nice big bounce, right? It went incredibly bullish. I would say even elliptic, tested the previous high, boom. We bought right here at the bottom, by the way. Netflix continues to push higher. Breaking out convincingly. It's holding. So we should see higher prices here shortly. Google, incredibly bullish, right? Convincingly. Nvidia is still lagging a little bit, but I think this is going to go. Okay. So the next one to go is going to be, it's going to be Nvidia. I don't know, should I put an arrow? I think the green buy is good enough, but we'll put it there just for the hell of it. Okay. And again, this is to remind us what we said last time, right? Tesla, kind of stuck at that 850, huh? Remember our target was 850? It's kind of stuck there. PayPal continues to push higher very nicely. I think this goes much higher. Snapchat, starting to, finally move to the upside. I think that's going to go much higher. Shake Shack, right? Popped, kind of high basing. Look for higher. And now let's take a look at airlines. Delta not doing anything. American Airlines, nothing. Southwest looks like it wants to bounce. It's kind of hanging on there, waiting. Alaska up against resistance. JetBlue not doing anything. Spirit, nothing. Allegiant, nothing. Hawaiian, nothing. SkyWest, nothing. Ryanair, eh. And EasyJet, eh. Nothing there. Okay. All right. Let me. This is the NASDAQ versus the S&P. Okay, and it's been testing this previous high here for a while. It's kind of stuck there, right? High basing. Well, look what it's doing now. Okay, it's about to start to break out. So again, all indications right now are pointing to market leaders going higher and dragging the Nasdaq with it, and the Nasdaq is going to drag the rest of the market with it higher. Okay. Um, Even semiconductors versus Nasdaq, you're going to see semiconductors have been leading to the upside. All right. So what's even more bullish than the Nasdaq is semiconductors. Imagine that. Gold versus small caps just collapsed completely. Okay. Gold versus Nasdaq, bear flag, collapsed. So don't look for gold to be doing much of anything. China versus Nasdaq, kind of holding its own, but again, it looks like a bear flag, doesn't it? I think we can validate this now. Right? It looks like China wants to push lower, and the market leaders of the Nasdaq are going to continue higher. Okay. So in this case, what you would see is you would see China go down against the Nasdaq. All right. Jobs that came out today, it was 900, way too fucking high, way too high. And again, you see the same fucking thing, right? The same fucking thing where bad news is good news. How the fuck do you have a million, close to a million initial unemployment claims, and oh yeah, let's go out and buy stocks. Ooh yeah, it's gonna be higher earnings. Ooh yes, it's fucking crazy. But it is what it is. It is what it is until it's not. Okay. So don't fight it. Pick your battles. Take your little jabs if you want to short. Otherwise, just stay long. You know, let it do what it's got to do. The time will come. I promise you. It always does. So we're high basing right now, looking to make new all-time highs, which we did. We didn't close at all-time highs yet, but we're really close to that. Now remember, when the volatility falls, volatility starts to drop. And we're at 21 now, okay? We're down to 21. When the volatility drops, what happens to the intraday movement, right? The intraday movement starts to shrink. So you're not going to get those 2% days. Right? You might get 1.25, maybe 150. Occasionally you might get 2% push higher, but they're more rare. They're not as common. At 4,500 vaccines. Well, apparently from what Biden is saying, that there was no fucking plan for distribution of vaccines. It's just a fucking complete disaster area left over by Trump. And it doesn't surprise me because the guy didn't know what he was doing anyway. He was more worried about, pushing lies than he was about dealing with COVID or any of the other problems that we've had with the economy. So I suspect that Biden and his crew are going to fix that problem. And once they do, I think, once it starts getting going, then the vaccine is not going to be an issue. Okay, especially when we have to do 65 million above the age of 65. So if we do 65 million, I think that's greatly going to reduce the death rates, assuming that most of those people are willing to take the vaccine. But again, at this point, my concern is not even the vaccine. Does it add to the problem? Sure. My concern is with the scarring of the economy. Okay, you didn't need to have a pandemic in 2008 in order to take you fucking 7 years to start to recover, right? So it's kind of the same thing. Even if they fix the vaccine, there's still scarring in the economy. So I hope that kind of makes sense. They just really have to fix this vaccine issue. It's a disaster. It's an embarrassment. Greatest, richest, most innovative country in the world, and we can't, put fucking injection in people's arms. I understand it's a very big task for sure, but move towards it. Move towards that direction, and there's no plan. Just shows you what a fucking scumbag Trump was, right? How incompetent. Whatever. I'm tired of talking about him. I'll be honest. I'm just tired of him. Not sure why this is still here. All right. So, again, we are going into this parabolic move. Look for this to continue, and then we'll get some kind of correction. Okay. The more parabolic it is, the more likely it is that we're going to get that correction. All right. Doesn't mean we're going to start to fall apart. It just means that there'll be some kind of a deeper correction, maybe 5-7%. And then go from there. See what it looks like then. Okay. Any other questions? Did you guys see the trade balance? Right, continues to be 68 billion per month. That's fucking a lot. Right, that's a lot. Especially when you have high unemployment. Sure, it's a position of strength, as Edward used to say, when you have 3.4% unemployment. Yeah, that's fine. But now when you have 20, 30 million unemployed running around, and you're still importing, that's not a position of strength. That's fucking major weakness. Major fucking weakness. And again, it's this incubator economists, well, we just print money and it doesn't matter. Okay, we'll see if it doesn't matter or not. We'll see. All right, what time is it? So 2:52 in the U.S. Unless you guys have any more questions. Anybody? I know there's a little bit of a lag, so I'll wait. If not, I'll go back to my bed, sit there and try to recover from this thing. Oh, what a fucking disaster area. Just really, really, it was bad. Now they're telling me my blood is too thick and blah, blah, blah. I don't know. Oh, Bitcoin. Again, I don't think Bitcoin, I don't know if it's just my bias or what the fuck. I just think studying price movement, when you're going towards 50, you hit the 30s, you go to 40s, then you come back to the 30s, then you go back up to the 40s, low 40s, then mid 40s, then it comes back down to below 40, then it continues back up, and then it goes to 50. It just, again, study oil. Go back in time and study oil and see how many times it went from mid 40s down to 30s and then back up to the 40s, just slightly below 40 and then up to 50. I think it's going to be something like that. That based on the price movement, that's what it looks like to me. Let me see if I can find it here. It's just really just trying to shake people out. It's trying to freak everybody out. And nothing more than breaking a trend line would freak. Because remember, everybody's a chart expert now, right? Everybody knows what a trend line is, and they're going to act based on that trend line. That's why I don't like the break of a trend line in of itself. Okay. Somewhere in here. Right, so you start getting something like this, and then boom. That's what I think is happening. That's what I think is happening. I don't know why that dude keeps popping up. Listening to one guy, you think possibly that you start printing printing $1 trillion is a joke now. It's like, like nothing. With the, I think. See, I never had a problem with printing so long as it wasn't mainstream. Why? Let me show you this. Here's the way I viewed the initial. Um, fuck, I can't move this. Here's how I viewed the initial kind of QE slash high deficits. All right, so you have a home price that kind of fluctuates, right? And every time there's a downturn in home prices, somebody's got to eat it, right? Somebody's got to take it in the ass. Now, typically when we had higher interest rates, we could just lower interest rates, let the price of the home appreciate, let some people take it in the ass. It worked, okay? In 2008, it was much more severe, definitely. It started out with FAS 157, which marked to market these liquid acids. You know, everything is a fucking derivative of the derivative of the derivative. It got a little bit out of control. So this part right in here had to be filled. Okay, you had to fill this void here. Because if you didn't, then the whole entire thing comes down, falls apart. So you had an interbank kind of QE. Okay, I'm going to go out, I'm going to buy these bonds, I'm going to suppress interest rates, I'm going to buy some credit default swaps, I'll get the markets moving again. It's all interbank, right? So it's not necessarily these dollars are not going out into the public, right? Sure, it's going to push up asset prices. That's a different animal, but you're kind of trying to fill this void. Because if you allow this void for the banks to lose this kind of cashola, they fold. It's over. So you can't do that. So it makes perfect sense to me. So long as you do it interbank. I don't give a shit. Fed to the banks to this to that. This time around, it's not the same thing. This time around, we're trying to bail out, we're providing liquidity to companies that are junk. They're junk bonds. So you're buying junk bonds. And you're going to do what? You're going to provide liquidity. But we have an insolvency problem. We don't have a liquidity problem. See, in 2008, we had a liquidity problem. They just didn't have enough cash. So we did the QE, we did the MMT thing, $1 trillion, which was 10% of GDP, whatever. We bundled it up, okay? We fixed the liquidity problem. The solvency is okay. We go back to normal. This time, you have an insolvency problem, and you're trying to fix it with liquidity. It's a different animal. I'm not against the helicopter money. Okay, you got to do it, right? If you want lockdowns, you got to give people something to fucking survive off of. But the problem with that is it becomes mainstream that you can just print money and hand it out to people. And when that happens, now you're opening up a fucking another can of worms that you don't want to be opening. Because now you get the progressives going, right? They're going to want fucking everything free. And job guarantees and this and hire that and give me this, right? Remember that door on Mitch McConnell's door, that graffiti? It says, where's our money? They're demanding this money. So does this go away? I don't think so. Right? And let me see if I can find that picture. Don't know if I have it here. I don't. Anyway, but if you look at all the auto stabilizers that we have put in place, all of them, it just never seems to be enough, right? So you have to keep adding another layer of auto stabilizers and another layer of auto stabilizers and another. What point does that stop? You got to stop at some point. And if you cannot stop, which is our case, then you are running in the dark towards a cliff at top speed. Remember, power is that you cannot control is destructive, right? So if we cannot reverse what we do, then we have power that is not controllable. You can't raise interest rates. You can't stop QE. You can't stop helicopter money. Well, it's a one-way fucking street, right? It's power. It's a Lamborghini at top speed in fucking seventh gear, pedal to the metal, with no brakes. Well, you're bound to fucking hit something. So I don't want to also lead you down the road where hyperinflation, blah, blah, blah. It's not what I'm talking about. If you look at Japan, Japan was the number 2 economy in the world, and they stagnated. They stagnated for fucking 40 years, 30 years, whatever, right? So, again, even if the U.S. were to go from 25% of global GDP to 12, 12 is still massive, okay? It's massive. But through stagnation, right, it starts to shrink. And you might be thinking to yourself, well, that's not too bad. Well, it's not too bad unless you're an American and you got to go through it. It feels like someone is slamming on the brakes. It doesn't feel good. A lot of fucking social unrest, a lot of inequality, a lot of fucking populism, right? So I don't know if Biden is going to be able to do it. I don't think so. I don't think so. And I'm not a political person, but I don't see any economic theory out there that's showing me there's going to be economic growth. And if there is, it's going to be very minuscule, right? So what happens when the stock market starts, to fucking blow up, right? How are you going to fill this void in the stock market? What are you going to do? Print more? You see? It's a problem. It's a problem. Right? It always feels good when we're doing it, because it's like, oh, wow, this is great, Everything is working out fine. And all the incubator economists, they're all out, cheering. Until reality hits. Right? I don't know. At least that's my take right now. I don't think that the world's going to come to an end, but I just think we're heading in the wrong direction. And you don't know what's going to blow up between now and at least we get some kind of growth going. Maybe 2-3%, whatever, GDP. What's the price of the stock market going to be then? What's the earnings yield going to be then? What are interest rates going to be then? What's going to be the impact on housing? Right? Let's talk a little bit about housing. Housing is kind of fucked up. You got very low inventories, which means it's not a lot of construction jobs, right? And you have very high prices. And most of those high prices, from what I understand, and I'm not a real estate expert, but they are on the lower end. And I talked about this before, that what you're having is a very weird kind of economy in terms of financing, investing kind of thing. I think everybody read too many fucking books, and they all ran out and they're like, oh, there's a recession. Okay, it's time to buy stocks at any price. Doesn't matter. Forward-looking indicator. And I think people they believe the books. I think everybody just fucking went out, especially with this Robinhood bullshit. Everybody went out and started buying, thinking that they're buying value, thinking that they're in the know, thinking that they are smarter than everybody else. But when everybody else is doing the same thing, you end up in a very, very stupid fucking place. So the example that I used, I think, in the last video, and I think it was to subscribers, I'm not sure if it was public, but you look at Ford. The average car that Ford sold was 41,300, blah, 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 whatever, which is one of the highest prices ever. Highest prices ever. During a pandemic. So what does that tell you? Right? Why did everybody run out and start buying fucking cars at a higher price? Because they think they're getting value. They think they're cheating the system. It's the same thing that's been going on with housing. Every time interest rates go out, I gotta go out and fucking, refinance and buy a home. It'll never be this low again. It'll never be this low again. And they keep saying the same thing now for decades. It'll never be this low. And they keep going out and buying homes at a higher and higher and higher price. So I think they read too many books. Honestly, it's a very strange phenomenon. Yeah. After Yoo-hoo. Good man, good man. Uh, I hope that makes a little bit of sense. I tried to write a book once, and the more I wrote about it, the more I kept coming up with models. And the more I kept coming up with models, I'm like, no, 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 there is no model. It's never the same. And that was a good learning lesson for me. It's never the same. I can't tell you what the next recession is going to look like. Who could have ever predicted that you're going to have a collapsing economy with an all-time high stock market and the government just willy-nilly printing 25% of GDP annually, not 1 year, more than one, and that QE would just be like, oh, okay, yeah, let's go buy junk bonds. Let's try to fix an insolvency problem with a liquidity problem. Who would have thought that? How do you predict something like that? This is why I don't like models. This is why I couldn't write the book. Right? I don't know what's going to matter. I don't. I have no clue. I think nobody has a clue. I just know that we're heading in the wrong direction, running at top speed in the dark. That's it. Beyond that, market's going higher. You're going to pump more trillions, it's going to go higher. You're going to have a correction here and there, it's going to go higher. So, honestly, I wish I had more answers. But I think that's the difficulty of financing and investing. You don't know what kind of stupid shit the crowd is going to do. You don't. You have no clue. They just read one too many fucking investing books. Buy when there's blood on the street, even if it's your own. Buy the dip. Right? How many people have been, how many years, how many decades have the people have been, well, not decades, but a little bit over a decade, people have been trained to buy the dip, and they will. And now that they feel so comfortable and it's just so easy, everybody's a fucking expert in stocks, they're going to do more of it. And when the time comes and everything goes, you think they're not going to buy the dip? Of course they're going to buy the dip. They're going to double, triple, and quadruple down until they blow themselves out. Just like the Bitcoiners did. Go ask them. They'll explain it to you. And then I'll be like, well, why is it going down? I don't understand. You don't understand. You'll figure it out. Anyway, do you remember the quote? First. They're going to own everything. I don't think that it's not. Okay, look. Here's how I view it. I don't believe in these stories. Remember, good stories need a villain, a victim, and a hero. And there's no better, easier way to convey a villain than to use government and to use a central bank. And always, we the people are going to be the victims, right? And the person that's telling us that banks and government is evil, they're going to be the heroes. It's the same thing. From the Tea Party to the MMTers to Bernie Sanders to whatever you want, it's always the same fucking story. Now, in my view, central banks and these incubator economists, they don't know any better. They don't. They just kind of take the one-trick pony, print money. They twist it and bend it and flip it upside down and paint on it and put perfume and keep repackaging it, keep repackaging it, keep repackaging it as if it's something new and novel that they came up with and this is going to create economic growth. Okay? They're full of shit. All of them. Until an economic theory can show me real economic growth, $1 created of deficits is going to create $1 of GDP growth. Until that economic theory comes along and proves it, to me they're garbage. All of them. Demand side, supply side, garbage. Garbage. Uh, don't don't think as central banks as evil. Think of them as stupid. They don't know what else to do. You know, imagine I put you the head of the Federal Reserve tomorrow. What are you gonna do? You're gonna start being all austere and shit, right? Yeah. You're gonna start unwinding, right? On your watch. You're gonna do that? I don't think so. I don't think any of us would do it. I think we would be just as dumb as they are. One trick pony. Fuck, I don't want this thing to blow up on my fucking watch. So they keep doing what they're doing. I know it's crazy, but my solution, we need a new industry that's going to be labor intensive. It's going to be able to create jobs, economic growth. Until we get that, we need to decrease the amount of hours that we work, allow more jobs to be created. We're going to have to go through some pain, like it or not, because we're way too expensive in terms of labor with the rest of the world. And they're eating our lunch. And we're kind of stuck in this. We have to be importers and everybody else exports, and we have to fucking, take it in the ass. Right? So, definitely you're going to need some taxes to be increased on the top 1%. I mean, how do you go through a pandemic and you increase the wealth of the top 1% by a trillion plus? There's something wrong there, obviously. Right? You got to stop this bailing out of zombie companies that are not going to look to maximize profit, but they're going to look to minimize debt, and that's problematic. You got to let prices reset to a certain extent. There's got to be some pain, like it or not. And I think that's, and then we wait. We wait until some industry comes along that's not going to do the same fucking thing that everything else, like Tesla. Well, I'm creating a car, but it's electric. Who gives a shit? I'm still going to go from point A to point B. I'm not going to get there any faster. I'm not going to get there more efficient. I'll just look cooler in it. Amazon. Well, you can just buy it from me. Don't go to brick and mortar. So you destroy brick and mortar, and then you give it to Amazon. I don't see where the value is there. Well, the prices are lower. Okay, they're lower, but so are jobs. So you're pooling a lot of money in one location. Right? There's a lot of pool of money, a lot of wealth going to Amazon while brick and mortars are being destroyed. I don't see the efficiency in that either. Google. Okay, there was definitely some nice streamlining from Google, but where's the revenue coming from? Advertising. Well, how much fucking advertisement can there be in the world? At some point, you top out. So, Apple, innovative, nice, right? iPhone, a lot of efficiency there, well deserved, but that's done. Now what are you gonna do? Oh, I'll make cars. I'm gonna make Apple cars. Come on. Is that what we need? An Apple car? I don't know. I'm ranting. I just, I don't know. I don't know. I just think we're going the wrong way. We're definitely going the wrong way. And again, look at retail sales. They suck. How are you going to keep retail at such a high level? How are you going to do that? You got 20 million unemployed running around. Keep printing money. Okay, so remember, even if you maintain that consumption, You're only maintaining. You're not even growing, right? Go buy more from Amazon. Destroy mom and pop. How is that going to help me in the economy? I don't know. To me, there's what was it? 359 companies, tech companies that are not making money, but the stocks are fucking like ballistic. I forgot. Uh, I saw it when I had my fever. I'm like, this is fucking 2000. What, doesn't anybody else see this? This is 2000. They're not making fucking money. They don't care. Can you make your next payment? Yes. Buy the stock. That's all they care about. Again, they're trying to fix an insolvency problem with liquidity, solving for liquidity. Strange to me. Strange. All right. So I've said too much. Let me go rest. Uh, look for further upside, right? This is high basing right now, right here. Okay, high basing. Look for more upside. All right. Everybody feels good with Biden. You know, it's that warm, fuzzy feeling, drinking a little bit of Kool-Aid. Right. Trump, the disaster, is not fucking in there, so anything other than that is going to be better. Right. Hopefully, we can get the vaccines in people's arm quickly. That should definitely help for sure. But the scarring in the economy, I don't know. I'm skeptical. All right, guys. Thank you very much for coming. Again, I'm sorry that I'm not doing these videos as often. I'll try to do it more and more as I get healthier and healthier. I still got pneumonia. I'm still taking fucking medicine for the next month. Me and old age are not going to get along, I'm telling you. We're not going to get along. We're not going to be good friends. All right. Again, thank you very much. Many kisses. Ciao.